Is Pepsico stock an excellent defensive dividend one to buy for 2023? I'm going to answer that question in this video using a few different metrics, so let's get right into it. The first thing I'm going to look at is Pepsi's price performance in 2022. It actually Pepsi's stock price actually increased in 2022. One of the few stocks that did. It was up 4% for the year when the broader S&P 500 was down nearly 20%. So a relatively significant outperformer for the year. Kudos to Pepsi stock for achieving those gains. So the next thing I want to look at is PepsiCo's revenue growth quarterly year over year. And you can see very nice growth starting in after the bottom in 2016. The company's been able to start generating some revenue growth, and that was really, really good for the pandemic. People staying at home were snacking more often, and Pepsi has a robust snack division, snack segment in addition to its beverages. Its snacks did really, really well during the pandemic, and they've continued to do well as people are still spending a lot more time at home now versus what they were doing before the outbreak. People are still working from home a lot more so than before the outbreak. People are learning from home a lot more, working out from home a lot more. So just in general, a lot more time being spent at home now versus before the outbreak. And that's good for Pepsi because that means you're going to your fridge more for a Pepsi beverage, or you're going to your pantry more for a Pepsi branded snack. And so that's been good news for Pepsi, and that's likely to persist in the near term. Another thing to look at is Pepsi's operating profit growth. Operating income for the trailing 12 months, TTM, has been increasing just like revenue has been increasing. Operating income soared to a record near its record 11.3 billion in the most recent trailing 12 months. One of the reasons for this is Pepsi has incredible pricing power for its portfolio of products. Consumers have not switched to competitors' products as Pepsi has implemented price increases across its portfolio of products. In fact, management's been talking about how resilient its pricing power has been during this price increasing cycle compared to other inflationary cycles in its history. Typically, when a company raises prices, people buy less, right? If you remember from your Econ 101 class, prices go up, demand goes down. But Pepsi has not experienced that to a degree that it has historically experienced in the past. In this instance, when it had increased prices, demand has not gone down by that much. And so that it demonstrated that Pepsi's pricing power is resilient. Consumers are seeing Pepsi, they're seeing the price higher by a nickel or a quarter or a dime per beverage or per bag of chips or whatever it might be, and they're picking up their product and putting it in their grocery cart still. And so that's good news for Pepsi investors, and that's partly the reason why the stock performed so well in 2022 amid the rising inflationary pressure that plagued so many businesses worldwide. The next thing to look at is Pepsi's cash flow from operations, which is also rising nicely, 11.29 billion in the trailing 12-month period. And if you look at the longer term trend going back before 2014, you can see an upward path from cash flow from operations, which is great news for investors. You want to see that continued cash flow coming out of the business, which then the company can use to pay dividends, which is especially important for those of you that clicked on this video because you're interested in the dividend side of the business. So let's look at that next. PepsiCo's dividend per share annual has increased very nicely since 2014 and even before then, but I chose just to go back 10 years for this metric, and you could see from below $2.40 per share, dividends per share has risen all the way up to $4.24 24 cents, 25 cents if we round up. And investors of today can reasonably expect Pepsico to continue increasing its dividend over the next 5 to 10 years, maybe at a more moderate pace, maybe at the same pace. Regardless, Pepsico is likely to continue increasing its profitability through one of the reasons is because of its pricing power. It's going to keep raising prices on its portfolio of products ever so slightly every year for the next 5 to 10 years on average, and so that's going to translate into that should translate into increasing profitability, which can translate into increasing dividends per share. Finally, let's look at PepsiCo's valuation, looking at the price to earnings ratio forward, trading at a price to earnings of 24.24, near the higher end of its range, going back a couple of years in that metric. And then looking at the price to free cash flow of 38.49, it's just about as expensive as the stock has been going back all the way before 2014. So the stock has hardly ever been more expensive than it is now, looking at the price to free cash flow. So despite its excellent prospects and its excellent performance in 2022 and its defensive nature, I'm going to say that PepsiCo is not an excellent defensive dividend stock to buy for 2023, primarily because of its expensive valuation. There's already been investors that have flocked into the stock, and that's caused the valuation to increase, and paying near the most expensive valuations in its 10-year history is a risky proposition, which is not what defensive investors typically like to look for. So for that reason, I'm going to say PepsiCo stock is not an excellent defensive stock to buy for 2023. All right, thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.